Every trader trusts price. Very few traders understand who is behind that price. Price can move without commitment. But volume reveals commitment. If you've ever seen price move sharply and then completely reverse, the reason was simple. Volume didn't support the move. Today's episode will teach you how to read volume correctly, not indicators, not formulas, but market participation itself. This single concept alone can stop you from chasing false moves. You've seen this many times. Price breaks a level. Candles look strong. You enter confidently. And then, momentum dies. Price stalls. Reversal hits. You think the breakout failed. But the truth is, the breakout never had participation. Most traders use volume wrongly. They look at spikes only. They ignore context. They treat volume as confirmation after entry. Volume is not an add-on. It is context. Understanding volume with price. Let's decode volume step by step. What volume actually represents? Volume answers one question. How many participants agreed with this price? High volume is equal to high agreement. Low volume is equal to weak participation. Price can move on low volume. But it cannot sustain on low volume. Volume plus candle relationship. Strong price move. Large candle. High volume. Clean close. This indicates acceptance. Weak price move. Large candle. Low volume. Long wicks. This indicates temporary push, not strength. Volume during consolidation. This is where most traders ignore volume. Healthy consolidation. Price moves sideways. Volume contracts. This shows market is waiting, not exiting. Breakouts from such bases have higher sustainability. Volume on pullbacks. Strong trends. Rising volume on impulse. Falling volume on pullback. Weak trends. Falling volume on impulse. Rising volume on pullback. Volume shows who is in control. Market psychology behind volume. Volume reflects conviction. High volume zones. Institutions active. Positions being built or unwound. Decisions being made. These zones matter more than random candles. Low volume moves. Low volume rallies often mean short covering. News reaction. Retail chasing. These moves are fragile. Why smart money uses volume quietly? Institutions prefer accumulation on low volatility. Distribution during excitement. Volume spikes during emotional phases. Not during smart accumulation. Understanding this protects traders from emotional entries. Common mistakes traders make. Mistake 1. Looking only for volume spikes. Spikes without context are meaningless. Mistake 2. Ignoring volume during sideways markets. Sideways plus falling volume is information. Mistake 3. Assuming high volume always means bullish. High volume can also mean distribution. Mistake 4. Using volume indicators blindly. Indicators summarize, price-volume relationship explains. Mistake 5. Entering before volume confirms. Price first, volume second, but confirmation matters. How to understand or apply it? Education only. This is an educational reading framework, not trading advice. The 4-question volume framework. Before reacting to any move, ask. Is volume expanding or contracting? Is volume aligned with direction? How does volume compare to recent candles? What is price doing after the volume spike? Volume without follow-through is a warning. Volume plus structure combination. High-quality situations occur when breakout level plus rising volume. Retest plus low volume. Continuation plus volume expansion. Low-quality situations. Breakout plus low volume. Choppy candles plus high volume. Multi-time frame volume reading. Lower TF execution noise. Higher TF real participation. If 5 minutes volume spikes but hourly volume is flat, sustainability is low. Volume is a filter, not a signal. Volume does not say buy or sell. It says, is this move worth respecting? That alone improves discipline. Price tells you what happened. Volume tells you how seriously it happened. When traders stop chasing candles and start respecting participation, their understanding of markets match yours. Tomorrow, in the Sunday Weekly India Market Outlook, we'll apply this volume logic to index structures, identifying where participation may expand or fade in the coming week. See you tomorrow.